Candlesticks are pictorial representation of the intentions of the buyers and sellers in the market. But what if I told you that many of the things you have been taught about candlesticks are all lies? Talking about the doji, pin bar, engulfing candles, shooting star and the rest of them, the truth is that none of them will be able to work if you don't apply this concept to them on your chart. The mistake that many traders make is that they treat these candlesticks as though it's the holy grail. They believe that once they see a nice candlestick, that they have found the keys to making heavy profits in the market. But once they start to apply them on the chart, it never goes according to plan. Although candlestick patterns can be used to predict serious price movement in the market, the problem is that a lot of people use them completely wrong. They see a bullish engulfing candle and they burst out with excitement, thinking it's a great time to buy the asset. But then, the market takes them unawares, like a sudden crack of thunder in a clear blue sky. It feels like they are walking into a glass door, while thinking it was open the whole time. What if I told you that there is a concept that when applied to these candlesticks, you can be able to know when a particular price movement is about to happen? You can know if a particular candlestick is going to work out, or if it is going to be a total failure. All this and more I will be teaching you in this video. But before we get to all of that, do well to like this video and subscribe to our channel. If you are encountering us for the first time, now my tribe soldiers, let's get down into this business. Now, it is a combination of two or more candlesticks that makes a candlestick pattern, and each of these candlestick pattern that you see on the chart, it's made up of one of these type of candles: the market control candles, the power candles, and the indecision candles, and they all tell a different story in the market. Now, let's start with the first candlesticks type, the most powerful among them, and this is called the market control candlesticks. The market control candles have large bodies and small wicks. This is a control candle, and it indicates that the buyers or the sellers are in complete control of the market at this time. But this candle can get even stronger if you understand it more. For example, if the control candle is printed on the chart with a large body and no upper wick for a bullish candle, this is an extremely strong candle, as it is showing that the buyers had absolutely no resistance from sellers at this point. It's the exact opposite for bearish candles. If the candle has a large red body with no lower wick, it shows that the sellers had no resistance from the buyers at this point. Although these candles are pretty rare in the market, but if you see it appear on the chart, it's like hitting a jackpot. It shows extreme buyer or seller control. But when you are trading with this control candles, the size of the candle is a very crucial thing. Just like most things in life, size really matters. For example, you could get this control candles in different sizes, just like in these examples. All of these examples are control candles with buying powers, but the largest control candle is the strongest and also the best indication that the buyers are in control. But even though the last candle is still a control candle, it's a lot weaker indication than candle number 1. Large control candles show massive buying, while small control candles show less aggressive buying. But what happens when the control suddenly shifts? Alright, that brings us to another type of candlesticks. This candle shows us who is losing power in the battle between the buyers and the sellers, and who's about to take over. These are called the power candles. The candle wick shows rejected price action. So if you have a large upper wick, that shows that buyers tried to move the price up but got rejected, and sellers took over and brought the price down. These power candles have long wicks with small body. For this candle, the color of the body of the candle is pretty irrelevant. It doesn't matter if the candle is green or red. What tells you the real story is the wick. So oftentimes, these candles can show reversal points. With the candles showing large lower wicks, we can expect price to move up. Now, if we see candles showing large upper wicks, we can expect price to move down. Now, when no one's in charge, the candles looks very different. Many traders call this concept different names, like the pin bar, the hammer and the rest. But here, What matters the most is the story that it tells on the chart. Although these trading candlesticks work in a very powerful way in the market, but they cannot be traded on their own. You need to apply some strategies to them to amplify their strength. But before I start teaching you that, let me quickly introduce you to our mentorship program. Trading Tribe has an ongoing mentorship program, a 2-month course to turn you from a losing trader to a profitable trader. And you are not only going to be learning my personal advanced trading strategy that I use to make thousands of dollars in the market daily. You will also be getting up to 1 to 3 daily VIP trading signals and analysis on major currency pairs and derivative synthetic indices from the same strategy that you'll be learning in the course. Both the mentorship program and trade signals last for 2 months. To get access to our mentorship program, click the first link in the description box below. Let's talk about the third type of candlesticks in the market. We call them the indecision candles. This candle clearly tells us that no one is in control of the market. An indecision candle looks like this. They have wicks on both sides with small bodies. They show equal effort from both buyers and sellers, but actually there is no real progress. Now, there's a lot of different ways these candles can look. It could look something like this, and this, or this. All of these are indecision candles. The main thing you have to remember is that they have a small body with equal wicks on either side. Traders often call these doji candles. These candles usually appear before major breakouts or reversals, and that is because the market is trying to decide what it wants to do next, but hasn't completely decided on which way it wants to go yet. But here is a clear warning and disclaimer. You should never trade purely based off these candles, because this candle doesn't tell us who's in control, but when paired with another candle, it completely changes everything. For example, if an indecision candle appears on the chart, but then directly after a power candle is printed, this shows us that buyers have won in the indecision battle, and we can wait for price to do a pullback to this indecision candle and enter here. You can also use it as a clear reversal point when the market has moved strongly from the zone, based on the clear display of strength from the market at that region. Now, let's see some of the examples of these candlesticks at work on the chart. Now, in order to get the full effect of these candlesticks on the chart, we need to link them up with some very good trading strategy. For example, here we have a supply and demand zone, and when price gets to this zone, we expect one of these candlesticks to appear in order to get a good trade. And here we have it, a power candle appearing on the demand zone, showing us that the buyers have taken charge and power over the sellers in this territory, and they are ready to move the market to the next level. And because of this move, we expect the market to move right up from that point, as long as it has this clean movement here. Now, this is one of the most important parts of this video, in as much as we don't want to call these candles by their various popular names, but by what they truly do in the market. There is one thing that overrides all of their power: the previous state of the candles that prior to the major candles that move the market contribute to the reason why the market may move to your target direction or not. When the market is in a clean state like this one, sometimes even the indecision candles can move the market and reverse it in a very strong way. You must have seen a situation where a doji candle will appear on a clean chart, and while you think it's an indecision candle that cannot function on its own, it gives you a big surprise by moving the market in a way that you never even thought was possible. Will this happen all the time? Of course not, but that is the extent that trading on a clean chart can give to you. It makes even the weakest candlestick to move in a very strong way, because a clean chart represents a clean price movement on the bigger time frames. But on the other hand, we have the choppy candlesticks movement. On the choppy charts, even the strongest candles are reduced to breadcrumbs. The choppy candlesticks movement drains power from strong candlestick moves that are supposed to elevate the market to your target direction. If the candles prior to this power candle are all choppy with their price reactions, the power candle will have a very less percentage of moving to your target direction. And if the entire structure is choppy, it won't even work at all, Every trader must take note of this if you really want to make money from the market. And since this candle had prior candlesticks that move in a very clean way, this great price move was expected. Now let's look at another example. Here we marked out our liquidity zone, and we expect the market to move to our liquidity zone. And when the market got to the liquidity zone, you can see that the market created some kind of price movement there. Take a look at the prior movement and the post movement. The prior movement has a lot of clean candles, but as it was getting to that liquidity zone, something interesting happened. You can see we had an indecision candle here, which signaled us that the market is now in a battle. The buyers and sellers are competing, and this further weakens the price movement as it gets to the liquidity zone. And here, when the market finally touched the liquidity zone, we had a bullish control candle. If you recall the features of the control candle that I mentioned earlier, you will see that this is not an ordinary control candle. It's a big control candle. And after this control candle appeared, the market moved high, straight to the target direction. This would have been a very good trade if you took it. Now, here are my final words. Listen, tribe soldiers. Each time you are trading these candlesticks, make sure that you are trading them from a very critical point in the market, such as the support and resistance, the supply and demand, or the liquidity zones. This will amplify their strength in the market. And now, if you are a total beginner to candlesticks trading, I have made a full course that explains everything about candlestick trading. From the beginning to the end, you will learn candlestick anatomy, how candlestick trading works, how to trade each popular candlesticks in the market, and many more. Click on the video on your screen right now and see you there, my tribe soldiers.